Hey everyone, it's Julia Corky with Team Elite again with our Monday Mortgage Minute. We have Kevin Napoleon again here to talk about mortgages and keep you up to date. So today, let's talk about closing costs. What is involved and what does it cost a buyer to buy a property?
Yeah, well, hello, Julia. Good question.
Hey.
And this is one of those topics that buyers have either no idea what closing costs are, or they have no idea that they have to pay them. Because, as you may be aware, a lot of times when buyers want to start looking at property, they realize they may have to put money down. So they start saving money until they achieve that down payment. So let's say it was 5%. And that was, let's just call it $10,000. They get $10,000 in the bank and then boom, they think they're ready to go out and buy a house. And then they talk to someone like me to get pre-approved. And then we tell them, well, there's also other costs involved. I always relate it to buying a car. You have the price of the car, plus you have tax, title, and license that you have to pay on top of the car price. It's very similar with buying real estate, except real estate tends to be a little bit more expensive than buying a car. So what are closing costs typically? A lot of people try to use a rule of thumb, like it might be anywhere between 3 and 5% of the price, which is kind of a good way to initially look at it. It's usually going to be a little bit less than that. So I would say for qualifying to buy a property, you need your down payment plus maybe around between $6,000 to $9,000. But the day of closing, you probably only need about 5,000 above and beyond your down payment. So now those are just real high level numbers. Obviously, we'll elaborate more if we're going through a pre-approval or whatnot. But the point is, when you're saving, save your minimum down payment or whatever you're planning on putting down. But you need to allocate probably anywhere between 6,000 and 9,000 more for the loan review process and to get the loan approved. Does that make sense?
It does make sense. Yes. And we've talked about this earlier, but I was thinking I always tell my clients 2.5 to 3% above and beyond. So that actually was right on what I say when you were saying between 3 and 5. I thought, oh man, I don't say that high, but yeah, okay.
Yeah.
2.5 to 3. That makes more sense. So
Yeah, it's a good rule of thumb to have. And, when I always talk to people, I just tell them save as much as you can. Cash is king. It gives you flexibility, gives you options if you have to switch gears and do something or pay something off. But just know going in, you need to save money. And another point is it always helps to talk to someone like me before you go down that path. Make
yeah.
sure you're in good position. Don't try to buy a house before you have any idea what you're getting into.
Yeah, I think if a buyer talks to a good agent right off the bat, they're going to say, this is what you need to do first. You want to know what you can
Yeah,
and want to afford because a lot of
right.
people get excited and I'm like, you might not want to afford this property. So,
Yeah.
okay. Well, thank you very much, Kevin, for Monday Mortgage Minute again, and we'll see you next week.
Thank you.
Bye.